What makes Vanguard fixed income stand out? Is it low fees, smart risk-taking, or something deeper? Welcome, I'm Aqueli Parker. In this clip from a recent conference, you'll hear from Sara Devereux, Global Head of Fixed Income, as she breaks down what gives our approach its edge. From disciplined risk management to staying true to what investors expect from their bond portfolios. It's all part of what we proudly refer to as discipline that delivers.
Being at Vanguard is really differentiating, low fees, et cetera. Secondly, I spoke also about the team that we built here, absolutely phenomenal, that great balance of, Vanguard veterans and then from across the street, with like minds. But that's the third aspect is really that our philosophy is about delivering consistent results over the long term. Right? Bonds have a role in your portfolio. Nobody needs their bonds to be doing this when your stocks are. You want them to be stable and consistent performance. So everything we do is about that discipline that delivers. Right? Indexing, I'll call it a few things. Indexing really is in our DNA. We have these really smart sampling strategies. We've done tight tracking in and out for decades. That's just something that comes easily. And what you combine that tight tracking with a low fee, there's that consistent compounding effect over time, right? Then you think about active. The compounding effect is twofold. You have that low fee, but then you also have that consistent alpha on top of it that compounds over the long term. So how do we get that consistency? It's really about the discipline and risk. It does not mean we take less risk. Yes. It means we take more disciplined risk. Yes. We can be opportunistic. Yes. And when I think about our process and committing capital, we are absolutely focused on the most repeatable and reliable sources of alpha. We believe heavily in Sharpe ratios, right? We use an alpha waterfall that prioritizes higher information ratio strategies that have the best bang for your buck, best return per unit of risk. And it's a very disciplined approach that really focuses on those best strategies that are at the top of the alpha waterfall. And then we work our way down. We also believe in diversification, and instead of making concentrated macro bets, we have issuer concentration limits. We have concentration limits across all sub-asset classes, and we're able to do that because of the breadth of our team, right? So Sharpe ratios, diversification. We believe in being true to label. We think people they expect their bond portfolio to behave the way they expect. So we're not hiding weird things in there. And then finally, we do not engage in performance chasing. For example, as corporate bond spreads get tighter and tighter and tighter, high fee active managers, in order to cover that fee or hit that same notional return, they'll have to take more and more and more risk. And they will lever up and they will go into weird, things that they maybe shouldn't be in just to boost the yield to hit that target. And we don't do that. We are very disciplined. We'll generate dry powder and take some chips off the table, and we will wait it out and be opportunistic. And then when the spreads get wider, we can go all in when the time is right. And so I feel like all of those things together is what gives us that consistency. Is that discipline that really delivers.
Hit the thumbs up if you like this video on discipline that delivers. And don't forget to subscribe to our channel for more financial insights from Vanguard.